Ladies and gentlemen, Asian Guy here, and we need to talk about something critical happening tonight that could reshape silver markets for weeks to come. After 2 weeks of holiday closure, China's markets reopen tonight, and the implications for silver at $88 are more significant than most people realize. This isn't about dramatic predictions or conspiracy theories. This is about understanding how the world's second largest economy returning to active trading affects global precious metals markets, and why the next 2 weeks could determine silver's direction for months. Let me start with the educational foundation you need to understand what's actually happening when China comes back to markets. China represents approximately 18% of global GDP, but their influence on commodity markets is disproportionately larger. They consume roughly 50% of global copper, 60% of global iron ore, and approximately 15 to 20% of global silver. When Chinese markets close for extended periods, it's like temporarily removing a major participant from global commodity trading. But here's what makes this situation particularly interesting for silver. China's role in silver markets is multifaceted. They're simultaneously a major producer, a major consumer, and increasingly important as a strategic accumulator. Understanding these different roles helps explain why their market reopening matters. As a producer, China mines approximately 110 to 120 million ounces of silver annually, making them the world's fourth largest silver producer after Mexico, Peru, and Chile. But unlike many commodity producers who export most of their output, China increasingly keeps their silver production for domestic consumption. As a consumer, China's industrial silver demand has grown dramatically over the past decade. Their dominance in solar panel manufacturing alone consumes massive quantities of silver. Electric vehicle production, 5G infrastructure, and electronics manufacturing all require significant silver inputs. This industrial demand is relatively price insensitive because silver represents a small portion of total production costs. As an accumulator, China's approach to strategic materials has shifted significantly. Government policies now encourage domestic retention of critical materials rather than export for short-term profits. This policy shift has implications for global silver availability that markets are still adapting to. Now, let's discuss what pressure means in the context of Chinese market reopening and why 2 weeks matters specifically. During China's market closure, global silver trading continued in London, New York, and other centers. But without active Chinese participation, certain arbitrage opportunities couldn't be executed, and price discovery became somewhat incomplete. When Chinese markets reopen, traders immediately begin recalibrating prices based on accumulated information and repositioning based on market developments that occurred during the closure. The pressure refers to several specific market dynamics that build during Chinese market closure and release when trading resumes. First is the arbitrage pressure. If silver prices moved significantly in Western markets while Chinese markets were closed, arbitrage traders look for opportunities to profit from price differences between Chinese domestic markets and international markets. This can create sudden buying or selling pressure as positions get established. Second is the information pressure. Chinese traders return to markets with fresh perspectives on developments that occurred during their absence. Economic data, policy announcements, and global market movements all get reassessed from Chinese market participants' viewpoint, potentially leading to position adjustments. Third is the liquidity pressure. Chinese markets represent significant trading volume in commodities. When that liquidity returns, it can amplify existing trends or reverse them, depending on whether Chinese traders align with or oppose prevailing market sentiment. Fourth is the policy pressure. China often announces new economic policies or trade regulations when markets reopen after holidays. These announcements can have immediate impacts on commodity demand expectations and trading behavior. The 2-week time frame is significant because it typically takes that long for Chinese market participants to fully reassess global developments, adjust positions, and establish new trading patterns. During this period, volatility often increases as markets search for new equilibrium levels that incorporate Chinese demand and supply dynamics. At $88 silver, several technical and fundamental factors make Chinese market reopening particularly important. From a technical perspective, $88 represents a significant level that held during recent volatility. Whether this level continues to hold or breaks depends partly on Chinese demand patterns and trading interest. Chinese technical analysis often focuses on different levels and patterns than Western markets, so their participation can shift support and resistance dynamics. From a fundamental perspective, $88 silver affects Chinese industrial cost calculations and strategic purchasing decisions. If Chinese industrial users view current prices as attractive for forward purchasing, it could provide significant buying support. Conversely, if they view prices as elevated relative to their cost structures, it might limit buying interest. The currency dimension adds another layer of complexity. Silver is typically priced in US dollars, but Chinese buyers must consider yuan-dollar exchange rates when making purchasing decisions. Recent yuan strength or weakness relative to the dollar affects the effective price Chinese buyers pay for silver, influencing their demand patterns. Let's examine what historical patterns tell us about Chinese market reopenings and silver behavior. Chinese markets typically reopen with elevated volatility as traders position for expected demand patterns. In commodity markets, this often manifests as early session volatility, followed by more stable trading as market participants gauge actual demand levels versus expectations. Silver, being both an industrial commodity and a store of value, often experiences mixed signals when Chinese markets reopen. Industrial buyers might increase purchases if they anticipate supply constraints, while investors might adjust positions based on economic outlook changes during the closure period. The timing of announcements matters significantly. Chinese authorities often use market reopening periods to announce new policies or economic measures. These announcements can immediately affect commodity demand expectations and cause rapid price adjustments. Seasonal factors also play a role. Depending on when holidays occur, Chinese industrial activity might be ramping up or winding down, affecting baseline demand for industrial materials like silver. Understanding these seasonal patterns helps contextualize market reopening dynamics. Now let's discuss what market participants should realistically expect during this 2-week period. Increased volatility is almost certain. Chinese market participation adds significant volume and different analytical perspectives to silver trading. This additional complexity typically increases price volatility as markets incorporate Chinese viewpoints into price discovery. Volume expansion is likely. Chinese commodity trading adds substantial volume to global markets. When Chinese traders return after extended absences, trading volumes often spike as positions get established and adjusted based on developments during the closure. Pattern disruption is possible. Technical patterns and trends that develop during Chinese market closure might get disrupted as Chinese participants take different views on appropriate price levels and market direction. Policy sensitivity increases. Markets become more sensitive to Chinese economic and trade policy announcements during reopening periods. Comments about industrial policy, trade relationships, or strategic material management can cause immediate market reactions. Currency interactions intensify. Yuan-dollar exchange rate movements can significantly affect Chinese buying patterns for dollar-denominated commodities like silver. Monitoring currency trends becomes important for understanding potential demand shifts. Here's what educated market observers should focus on during this period. Volume patterns will reveal Chinese demand intensity. Unusually high volume in silver markets during Chinese trading hours might indicate strong Chinese interest, while normal volume suggests balanced participation. Price action during Chinese trading sessions provides clues about Chinese market sentiment. If silver consistently moves higher during Chinese trading hours, it suggests Chinese buying interest. Consistent weakness during Chinese sessions might indicate selling or reduced buying interest. Cross-market arbitrage activity between Chinese domestic silver markets and international markets can indicate whether Chinese participants view global prices as attractive or elevated relative to their local market conditions. Policy announcements and economic data from China should be monitored for implications for silver demand. Industrial production data, infrastructure spending announcements, and trade policy changes all affect silver consumption patterns. Currency stability matters for maintaining Chinese buying interest. Significant yuan weakness against the dollar makes silver more expensive for Chinese buyers and might reduce demand. Yuan strength has the opposite effect. From an educational perspective, this Chinese market reopening provides a real-time example of how global commodity markets function. Silver doesn't trade in isolation. It's affected by industrial demand, investment flows, currency relationships, and policy decisions worldwide. Understanding these global interconnections helps market participants make informed decisions and avoid surprise from volatility stemming from normal market functioning rather than fundamental supply-demand changes. The 2-week adjustment period reflects practical reality of how long major participants need to adapt to changed conditions and establish new patterns. During this adjustment, volatility tends to be elevated as markets search for appropriate price levels, incorporating all participant viewpoints. This is Asian Guy, and monitoring Chinese market reopening dynamics provides valuable insights into how global markets actually work. Whether you participate in silver markets or not, understanding these interconnections helps you better comprehend the increasingly connected global economy. The next 2 weeks will demonstrate how major market participants reintegrating affects price discovery and trading patterns, valuable lessons for understanding any globally traded commodity or financial asset.